Every time you swipe your card, open your bank app, or even deposit your salary, your bank is making money off you, but not the way you think. It's not just loans. It's not just fees. It's a carefully crafted system to profit from your everyday habits. Let me show you how it really works. When we think of banks, we usually think safety, stability, trust, a place where your money is supposed to grow. But behind that shiny logo and friendly customer care, banks are for-profit machines. They don't just keep your money safe, they use it, invest it, and flip it to make billions. And the best part? Most people don't even realize how it's happening. Let's break down 5 major ways banks squeeze money from you every single day. 1. Interest rate, spread. This is the core of every bank's business. They give you 3% interest on your savings account, but charge 10% to 14% when giving loans. That gap, called the spread, is their direct profit. They literally use your money to earn from others. And the best part? You carry all the risk. They keep all the profit. 2. Credit cards. Here's the silent gold mine. You swipe, you buy, and if you miss even one payment, bam! 24% to 36% interest gets added. It's not just interest. Late fees, over-limit charges, hidden penalties. Credit cards are engineered to profit from mistakes. In fact, banks want a chunk of users to delay payments. That's where the real money is. 3. Fees and penalties. Think your bank account is free? Think again. Minimum balance penalty, ATM withdrawal charges, SMS alert charges. These seem small. 10 rupees here, 50 rupees there. But across millions of customers, banks earn hundreds of crores every year from just these nuisance fees. It's death by 1,000 cuts. 4. Cross-selling products. You open your bank app, and boom. Mutual funds, insurance, gold, SIPs, credit cards. They're not helping you. They're selling to you. Banks earn heavy commissions for every product you buy through them. They're not your financial advisor. They're a full-blown marketplace, disguised as a service. 5. Float money. This one's sneaky. When you transfer money and say via UPI or NEFT, there's often a delay of seconds or hours before it settles. What happens to that money in between? It sits with the bank. Even for a few hours, banks park those funds in overnight markets and earn interest. Multiply that across millions of transactions, and you've got a silent, invisible income stream. Look, I'm not saying banks are evil, but they are businesses. And like every business, their goal is profit. They've mastered using psychology, time delays, and financial habits to turn your money into their wealth. If you don't understand how the game works, you'll always be the one funding someone else's bonus. But wait, here's the twist. With UPI, neobanks, and RBI regulations, banks are under pressure. Their old models are starting to crack, and they're scared. Want to know how UPI is disrupting traditional banking in India? That's coming in the next episode. Hit that subscribe button, and let's break the money system one video at a time.